The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here on this December the 12th. And thank you to our host, great programming. Hopefully we can keep that up. And the Dow's up 30 at 19,787, having made an all-time high. The S&P's at 2257, down $1.73. The comp index is minus 27 at 54.17. You've got a gold, and this is going to be very interesting because gold's trying to come back. It's down 70 cents at 11.61, but it's really, it's been, the story is, of course, the dollar, and the dollar has been, did I type that incorrectly? Yeah, XY. The dollar has been acting pretty well up until there was that sharp pullback from 102.05, and that was when? That was right there. That was on the 24th of November, and it came down trough A, trough B, trough C, and then had a very big spike Thursday and Friday. Today made a recovery high, but essentially it's holding quite nicely at 101.13, down 46. This is going to be very interesting because the pattern we're looking at suggests that if there is a failure in the dollar right here, let me just draw this in, that's an H formation. You will know it because the dollar will quickly trade into the 100.50 area or lower. And as it does that, gold, GC, gold, which is making a trough CD, this is a trough D in the daily chart. How many Ds can you get? Is right at a phase where there's a divergence between the MACD, which is a little bit positive, stochastic, which is quite a bit higher than it was in the recent trough G, G/C in the 161 area, 11,061 area. But most importantly, what we're looking at is the weekly chart really doesn't show any strength at this particular point. It's trying. We've just begun the week. It's flattening out in the stochastic at 5%. But you have to get that V-shaped pattern. You can't go flat. You have to get a V-shaped pattern in the stochastic to be able to get a rebound. And this is the week that, if ever there's a week that should see some kind of a bounce in some of these, in the gold and silver, and maybe even the TLT. The TLT right now is down 21 cents at 117.29. It's gone to a leg F to the downside in the daily, and that weekly chart has broken key support levels. Let me just move, I'll leave this here for the moment. This is the TLT 120-minute chart. It did make that requisite peak D in the Chapman wave recently, and then it took off to the downside yet again. So this is going to be very interesting because what happens when you've got a peak D in a sharp down mode, you have the, whatever it is you're looking at has the tenacity to be able to try to bounce. One of the things that you look at is this the start, since it went all the way to the fourth highest peak, is this the start of some kind of recovery process? So let me just show you something here. This is the E-mini. I'm going to go to the December contract, and the December contract has a peak F on the upside in the 120-minute chart at 2270.25. That happened last night. I was sure that we were going to pull back right at the opening of the futures last night at 6 o'clock Eastern time. Instead, it just opened kind of right at the close of Friday, and then suddenly went up 2.5 points, 3.5 points, 4.5 points, and we went up 10, and then gave back quite a bit later on. But just to have that kind of strength, and of course you had crude oil spiraling to the upside. So it's saying to me that we've got a mix. I had a question then, why do you say that this week could be very important? And I'll explain why. So we've got this leg D in the daily chart of the E-mini. You've got a leg F/A in the weekly chart. I need to go just for the moment to give you a different price. I need to go to the monthly chart to show you the strong leg C. Now I'm going to go, let me go this now, at the beginning of the week, we can take a little time. Let's just run these numbers. The Dow is at 19,791. It actually took out Friday's high, and it went to 19,824. I'd say to close above, a close in the 18,300. Sorry, the close in the 19,830s would almost immediately suggest that all the media will start to discuss the Barron's article on over the weekend. The headline was Dow 20,000. What did they say? Oh, I've got it here. Let me just check it out. Really very interesting. So let me just go through these charts right here. Let me just show you. This is what I showed my subscribers over the weekend. 16, 17 charts. I don't know how many, but it was really important to go through step by step. Let me go show you something right here. This is PEM breaks ground, a new 40,000 square foot. This is the Peabody Essex Museum. We've got a ton of money back in the, let me just get out of that. We've got a ton of money back in the late 1800s, 1900s because of the trade between Japan and Salem, Mass. And what happened was they built a museum, the Peabody Museum, and then it became Peabody Essex Museum because they amalgamated, and they've had a ton of funding. And that funding has really been a big part of their growth. And they doubled the size of the building. It was an expansion, part of the museum as a landmark. Now it's got a $650 million advancement campaign. So you see that they're trying to double the size. And this is what I've been talking about for years now, that museums all over the show are trying to double their size. I'm going to go back to my original thought in a moment, but I want to do this because I'm going through the charts. And because of this, it's very important for me to explain that I think if I can just find it, it's really important. I want to find it here. It's just this tiny little thing that says, there it is. Barron's cover, Andrew Barry. Get ready for Dow 20,000, up 13% so far this year. The Dow is outpacing both the S&P 500 and the NASDAQ. They could continue to outperform in the year ahead. So I wrote a whole thing here saying, oh no, just as I thought it was safe to get in the water, look what appears. Actually, there are so few people back in the market since the worries of the election going to the November low and the subsequent rocket ship takeoff. This is what I'm saying. Actually, that few actually had the chance to get back in with full positions, probably just small toe in the water type buys. Here's what our work today was suggesting regardless of the Barron's cover. Oh, and by the way, Barron's has way less influence on the markets than it ever had, if any, in fact. It used to have a lot of influence. So the market's suggesting a tad more strength and then a timeout. That's regardless of what Barron says. So I'm suspecting that two things is going to happen. One is we're going to go right through 20,000, like a hot knife through butter, or whatever the expression is, and we will be at 21,000s very soon. That's the one thing. The other says, you know what? We might just touch 20,000, but we're going to stall here. And actually, that's kind of my thinking at this particular time, that I think we're going to stall for just a little while to rebuild energy because we've had a spectacular move up in the banks, etc. Oh, I didn't finish all my numbers, and that doesn't matter. We're going to go through the step by step. It's a very important week. I'm going to explain why it's an important week for me, only based on the charts, not psychological or anything else like that. Oops, I didn't mean to do that. Cancel. I'll be right back. Basil Chapman, Tiger Technicians Hour, Dow's up 40 S&Ps. Punch.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So let's just finish those. So this is what I'm looking at here. When I go to long-term charts right there, we have just extended in the weekly chart of my triple yield bond interest rate chart. The white is the 30-year, and it just extended and is testing this really important trend line right here, number one, and it's in leg E. But when I was looking at it earlier this morning, I said, wait a minute, I think we have just done something that is really unusual. I think there's a chance that we have just had a Chapman Wave instant restart in the 10-year T-note yield at 2.493. But the 5-year has not done that. So it could be an isolated case. But in the meantime, I'm not going to mess around here. I think that based on everything I'm looking at, it should be brown. Everything I'm looking at, yes, I'll make it yellow. Rates are going to hold very well. No matter what the Fed says or does, if you're looking at interest rates, here's FMC. There's a question I had from one of our Denners. Peaky wanted to know about the FMC, not the FMC meeting, but the FMC Corporation. And the way I'm looking at it is acting very well. The question was, at what price would you start nibbling at FMC? This is a leg D. Everything about the technical suggests that it's very close to at least a mild pullback. Is it 58.98, up 17 cents? So the question is, do you want to nibble here because it should go higher? There's a leg C in the weekly and it should go to D, but the monthly is looking out very strong. I'm going to suggest that because there's only 50 cents to $1.50 to the upside, but there's really $2.50 to $3.50 on the downside over the period of 3-4 weeks coming up, why don't I suggest you hold off, put in a starter position. It's at 58.93. Put a starter position at 57 to 56.75. Somewhere there is your starter. You really want to actually be building a position that says 56.5, 55.25, and 54.25 are the levels that I'd be looking at. But I really would prefer to get a full position after I've started a position and it starts to show strength and it comes back and it goes down under the 56 into the 55s, and then the moment it starts to get back towards 57, I would add that final position, expecting that it's going to have that big leg to the upside in the monthly. So yes, I do like it. because it's going to go high, if you want to nibble here, you can, but I think that it's going to be a better price, 2.5, maybe even 3 points down to start positions. You might miss it, therefore maybe you want to get it in a little earlier. 57.60 is a 9-period moving average. So let's just make a compromise and say, if you want to start a little nibble at 57.61, do that, and then let me know when you do that, and we'll deal with it at that particular point. Okay? So now I want you to do this. The bank index, BKX, this is very important. The question here was, so why are you thinking that this will be a very important week? Why? Because we've made a peak E in the bank index. It looks to me like, just like the bonds, let me just throw this in here, the TNX.X, which is recycled. Oh, the recycle daily is in leg D. Recycle, why do I have something different here? Oh, look at that. Did I miss that? 1879, no, 1879. Maybe I wrote it incorrectly. So this is leg F. I'm sorry, that the TNX, the 10-year, all that talking. This is, I believe that this should be leg F. All right, that's fine. I'm comfortable with that. And we're underneath the inside wedge, the inside Chapman wave, inside track resistance, which is somewhere around 25.30. So let's do one thing at a time. You see that this area, I'm going to put in a big oval. I'd normally put in a rectangle. This one I think deserves an oval. I'm going to extend the daily. We're going to go to the right about 18, 16 bars right there. I'm going to do this, and we'll see if I'm correct, because this was an instant restart, and it's A, B, C, D. That was correct notation. Let's see if this is a correct notation. I think we're in a trading band, which says you can go up a little bit more in the yields, but there's a good chance we're going to have a high-level consolidation before something more substantial is done about the yields, either on the downside or the upside, depending on what the Fed says. And that's where we are. And we've gone in the weekly chart, in the 5-year, the 10-year, in the 10-year TNX, we've gone above the point that I considered a left side, right side price time match. We got there a little early. I've done it based on other methodology, not the plumb line that I usually like to use. That's a low that should be low of importance with equal number of bars on the left to the right, or on the upside, equal number of bars going to the high as going to the low. This is a little different. Okay, because this would stretch it out all the way into 2017. I don't want to go that far when I've got other technical considerations. And we've already, look, the last high was 24.89, and the high we're at right now is 25.12. We've already broken that. So why would I want to go out further? All right. So I'm looking at this. I'm saying, yeah, a rectangle formation, a little bit higher, but basically that's what we're looking at. And that's Chapman wave stalk leg formation. All right. So I've covered that. I wanted to get to the crude oil. I promised I'd get to the crude oil. The crude oil had a spectacular rally last night because Saudi said that they would cut back. But you know what? This is just all talk. We know that there's really a glut of oil out there. There is oil everywhere. And we're becoming exporters. I mean, we're doing well. So I think that this is going to fail at some point. But in the meantime, it is leg E in the weekly chart of the crude oil. So that says to me, let's go back to the dollar. Let's look at the dollar and say, wait a minute. If the dollar has a right shoulder failure because it never went above 102.05 and it's in a pullback here, what are the chances that gold has a pretty decent bounce? Doesn't have a big move, but a decent bounce. Yeah, I think there's a chance this week that gold, in fact, could have a little bit of a bounce. That would suggest that I've got to look closer at the TLT. And that says, hey, the TLT could, it's overextended on the downside. If I reverse this upside down, I would be looking at this as a leg F to the upside with a potential doji candle, and the technical starting to fail. In other words, in this case, no. And the technical starting to strengthen if it was upside down. In this case, the technicals are failing. So I'm going to say that, I said that incorrectly. The technicals are higher than they were and the lows that were made recently. And therefore, the opposite would be happening. The technicals are weaker now than they were before. And that's as if this was on the upside. Inverted, you don't really do that just for fun, just to show you a little technique that I like to use. Haven't done it for a little while. Haven't needed to. But if I did this right now, look at this. Here we go. So I'm putting this right here. And then I'm going to say, rotate, so flip, horizontal, vertical. Okay, and there it is. You see that those are the letters. That's a G, and this is now a, what did I say it was? A, B, C, D, E, F. This is now an F on the upside with a little doji candle. And you look at the technicals, and the technicals, there's the MACD. The MACD was very strong over here. And now at the highs, it's very weak. And you've got the unbalanced volume at almost at an inflection point. So I think, yes, I think we're very close to at least a bounce. I'm going to move this away. In fact, I'll use this for my next webinar to show the inversion. It's really, that was a beautiful chart to show just the potential to say we could have a little bit of a bounce now in the TLT. That's yield. But that just goes to what I was saying before. We're in a trading band. I'll be right back. Dow's up 44.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Oh my, I did that again. I'm sorry, Scott. I didn't see that. It was just covered. I had to do something here, and I moved the chart over, and I didn't see my calls. I waited a little too long, and the question was, well, let me do two things here. The question was on CX. I'll get there, but the question of the den, one of the reasons why I was trying to answer, I'm always looking at my emails and my den to see what the questions are. There's a question on the EEM, which is the iShares Emerging Market ETF, and it's trading at 35.90, down a little bit, down 27 cents. Yeah, it took a little too long to move to the right to a peak D. But I suspect that it's going to try to hold here. I'm just a little concerned that it has that right shoulder failure pattern, the Chapman wave, and that suggests that if there is going to be a a move to the upside, it better happen. You can't take up too much time. You have to get to 3650s, not you. The EEM has to get to 3650s really quickly, and that'll help the weekly. The weekly looks much better than the daily. Daily's extended to the right. I like a V-shaped pattern that's very clear. This is more looking like an arch. So all I can say, if you're long, you can hold the long, make a tight stop of 35.18, somewhere around there. And if you are short, watch carefully, because if there's a pop-up, it'll be really quick, and it'll pop above 36.41. So those are the parameters I'd be looking at. All right, and then the question is, let's go to Scott. Scott's back. Hi, Scott. How are you? No. Oh, you're there. Good. Okay.
Friday with the oil cuts in production, along with the possibility of Trump appointing the ex-CEO of Exxon, and that along with the meeting coming up. I knew people wouldn't be that interested in anything else. So those combined, I'm doing great with Rig. But I've got Rig's number, in other words. But what I need help with is CX. There's all this talk about infrastructure. CX is the largest concrete company in the world, and it is located in Mexico. Whether or not the peso it doesn't really matter, because they're bringing in all kinds of American dollars, and they're in 4 other countries as well.
And I
think it's just not responsible for people not to trade CX if you love X so much.
Okay, so CX is in fact Mexican cement company, Cemex, SAB. And what we're looking at is trading at 885 in leg, E to the upside. This kind of goes with the market right now. Stochastics at 90% is very good. The MACD is very good. They had a very quick run up. I wouldn't be surprised if it's in a little bit of a trading band right now. I know this pattern in the weekly chart really, it's a very familiar one, and it says that it has to break above. If it does, and it breaks above the high of the week of the 11th of 935, then it's just up and away. But at this particular point, it might just be in a consolidation area, nice little moves, but I'm watching it closely. In fact, I looked at it over the weekend, and I still thought, okay, peak D, let's see what happens today. Well, today's Monday, and it had a new recovery high, but it's pulling back now. If you've traded it, you're probably out already, right?
Yeah, I'm out of CX completely. And besides the CX, sometime we've got to sit down and really hammer out these other tech stocks and bio, because the object in this game, folks, is to get something when nobody else wants it, not when it's the most popular girl at the ball. You know what I mean?
Okay, but at the same time, Scott, we've also got to
you can buy on strength or weakness, but some of these companies are very, very strong, and no matter if food or pharma is the thing of the day. That's why I was so happy about POT, and when no one else liked it.
Right, exactly. So that's a good point.
It's fertilizer, whether it's an attractive or fun thing to talk about. You have to have it, and the same thing with these farmers. It's just like Gilead. There's no reason for it to be a $72 stock.
Okay, so let's just do 2 things right now. We're looking at the chart of, let me go back to CX, and CX says it is a very good stock. I have no doubt about that. It's over a period of time, it's going to actually climb very quietly in its own way. Once it's above $10, it's in a new ball game altogether. Just at this particular point, I think it might be struggling for a few days. I'm not sure it's going to break just yet into the 920s. It's at 884. So it might just consolidate. I would absolutely never think of this as a short, but I would say that you might want to wait. The next level of entry would be between 8.60 and 844. That's where I'd be looking at. It just needs a little time out to catch its breath. It's had a fabulous move. That's really what I'm saying.
Great. What do you think about my theory on the biotechs and the tech stock?
Yeah, the biotechs still have a political, they're a disadvantage because of the political atmosphere. I would be very careful. You could play, we in fact had IBB once again as a short. I took a break-even trade. I should have stayed with a short. It would have been the best thing. But I'm looking at it, and I'm looking at it more as bounces are to be shorted. But if IBB goes, the next level for a very strong bounce could be if it goes into the 257, 253 area before it breaks down completely. I think it's going to have another very strong attempt at a rally. But my longer-term outlook is that the IBB will go down. It's in a disfavored group, and that can last for a while. When it starts to get into the 220, the 200 area, I'm going to be looking at it completely differently. But for now, I think it's going to be, it's not in the favored political situation, so I don't think it's going to do very much other than quick pop-ups. Hope that helps you.
I guess the billion dollar question right now, Basil, is what in the world, if anything, is going to bump this market? I mean, I know a lot of people that bought VXX, and they just can't even believe it. And they were asking me all the time, I mean, I don't know. I mean, from ISIS to a different Ebola, whatever. I don't think anything's going to bump this market.
Yeah, there are some things that are happening now that put us into the cycle that I've been talking about for a long time. One of the reasons we are long, we've stayed long, we've added to our long positions. We did have some shorts, took very nice profits, a huge profit in one of them. The other is the IBB that we broke even, but I'm being very careful on the short side. I am thinking later in the week I will probably be starting to add to the short side again for some kind of a dip before we get into the 20,000 area. But I have to tell you something. When I look at the breakouts and the way they're breaking out and the structure of some of the weekly charts, I think major declines are for buying. And I do believe we're very close to some kind of a pullback. But
that's why I recommend that people don't stay at anything on Friday. Cash out of anything and everything, because we've seen too much of what can happen over a weekend. And once these dominoes start clicking together, it's a long way down.
Well, we'll see. Okay, Scott, thank you very much. Always appreciate your call. Good, thank you. So, folks, let's just do this. I wanted to go through a couple. I had a question. Let's just see. Goldman Sachs. Goldman Sachs is back to being a leader. It's just made a little bit, I'm going to call it an F/B for now. I think it's more like an F. I think it's just a little bit toppy right here, and it could pull back. But once the fund managers have the eye on a sector, it takes a lot to smash them down. But I would not be shorting Goldman Sachs. I'd be looking to buy it on any pretty serious pullback. If you're a real quick trader, that's something completely different. Then I would say, you could get yourself a good 5 to 8 points on the downside, but you got to be careful. So, folks, we'll be back. I had a question about in the Chapman Wave, my Trader's Corner, what the portfolio, what we're doing. I'll talk about that when we get back. Basil Chapman, Dow's up 40.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. So, let me just do this first. Lockheed Martin Defense. Defense with an S, Defense with a C. 246.69 down 12.84. Very sharp pullback. This is very unusual because of the weekly chart. I have to say that this has to be, looks to me like a G. It's what I call a right arm extension. It's a rogue wave. Suddenly out of the blue, it spikes up to a new high, lasted just long enough to have everyone switch from short to long, and then it just tanks. And I'm a little confused because the Lockheed Martin monthly, I could call it G. I'm going to do that, a G/C. I'm not confused anymore. That's what I originally thought. And I thought, wait a minute. Everyone's talking about, Trump is talking about defense. Everyone's talking about defense. I've got these things at highs. During the Obama years, I always talk about this. I have a friend, very liberal, just very generous, just a lovely person, brilliant, one of the most brilliant people I know, works for Raytheon. And I always chuckle and I say, hey, and all this time with the Obama administration, do you realize that your stock, and he works for Raytheon, is up from the 40 area to 140? I mean, you're making a fortune off defense. And he always says, I know, and then he chuckles. It's just really interesting, isn't it? Because that's the reason why I think that under Donald Trump, maybe the defense stocks won't be doing so well. There are going to be other things that come into the pie. That's just the way it works. It's the strangest thing. So I'm watching them very carefully. Why? Raytheon seems to have made a peak D-top in the weekly, maybe a peak D-top in the monthly. Had a single, this kind of rogue wave spike in the daily. I have to call, there's no other way I can count it. I have to call it an A-. Very unusual patterns, and that's on emotion. That was that big spike up after the election. So, oh, yeah, defense, man, they should be doing fantastically. So I'm watching them really carefully, and people talk about rotational corrections. Well, this is a rotational correction. So far, it looks like it could be one in an area that one would least expect it. So the question I had before was about Boeing and others. But let me just do this because I wanted to show you. Let me see if I can do this one at a time here. So yeah, every day for my subscribers, I do this, but I also post it in the den. I do the daily, weekly, and I do the 120-minute chart. I usually show the monthly, but the continuous contract now has changed in price enough that I can't really show it. So this is a peak F that I've got in the 120-minute chart at 2270.25. We haven't broken above it. I think we're in for a bit of a rest right now. What was this? This is... Okay, this is a very important one. I showed it over the weekend. This is wood. This is the global iShares. This is the lumber and timber timber and forestry. ETN, look, it's gone to a leg D. It's bumping up against the resistance on the left side. It's just extended past the left side, right side, price, time match, and the cup formation, all that other stuff. I'm teaching my webinars. The next one's on December the 20th. And then January the 10th for the 3. It's still archived. If you're interested, you'll have time. You can go through the archives of the first one. A lot of information. Gave questions, answered the questions. So now look at this. This is the HGX. This is the housing sector index, and it's tackling that peak D. Let me just look at it live right now. I'll do both live. Where are we? We're over here, and that says. HGX, did it make a new high? No, it's still right there. So that's interesting. The weekly chart's a little bit different. So it's leg HGX weekly. Wait a minute. What the heck? What the heck? HGX weekly. That's D. Oh, and then this is a single leg A at the moment, gray A, until it goes above, and it hasn't gone above. All right. So yeah, so that's saying watch this very closely this particular week, because if the housing sector pulls back from 247 right now, does not make a new recovery high above 251.46, but instead goes to the 244 9-period moving average in the weekly, in the daily. That's going to impact the weekly as well. And then if you look at wood, WOD, that's recycled ABC daily. Oh, no, I'm going to call this EFG for now with a G/C. All right. So in the chart wave, the reason why I'm doing that is because the MACD is so strong that it looks to me more like it's going to be a G than a C. And that says that we could be pulling back from here. A weekly chart is still very strong because it's in leg C. Now, is that correct? Did I have C in the, why would I have anything different? Long-term charts, right here. I have a D. A, B, C, very clear, D. So let's go back to our live charts here. A, B. Oh, wrong chart. There we go. No, it was the right chart. Okay, yeah, okay, so that's that. And WOD is, oh, I missed one. I knew that I missed one when I looked at that chart, and I said something's wrong, because I know I spent a lot of time on the black background chart. There it is, a D. Thank goodness, because D is what you want to get to. Look at that D. You look at the sharp pullback, chapter wave methodology, go for Ds. So now we're in D, so that makes this a particular difficult week for the WOD and the HGX index. If there's a sharp pullback by Friday, it says that will last a little while longer. But in the meantime, back at the ranch, the question was, so JP Morgan is the same thing, JP Morgan. We looked at Goldman Sachs, and now we're looking at JP Morgan. This is a leg D to the upside. I believe it's a D, 50-50, yep, that's a D, leg D. So I think we are very close to some kind of a pullback, and that's suggesting to me that we could be looking at some kind of a bounce. But it's still so far, it's still very strong in the weekly. Question is ESRX. ESRX made. This is the company of Express Scripts Holdings, online pharmaceuticals. It was taken over by Medco. No, it took over Medco, and A, B, C, and D made a peak D in the daily. Pulled back quite sharply from the 76s to the 68s. Now it's at 71.80. And the weekly chart, yeah, this is just stuck. So what was the question? Tim asks, I'm looking for an entry in ESRX. What do you think? Thanks. Well, Medco, I know, was a fantastic company. Then it was taken over by not a very good company, ESRX. ESRX is now Express Scripts coming down in the monthly. I'd be real careful. Tim, hold on. You give me an email when you see this between 70 and 69. Because if it takes out the wick of this particular candle, the Roman Chapman wave Roman candle of the 8th of December, and it goes starts holding for a few hours any day below 69.72, I think it's going to retest the bottom. I'd be real careful. Next question was, GT wants to know about the XAL. XAL is in, I'm calling this F just for now. I'm probably going to have to make an alternate count F/B. I just want to see what happens. It's putting back just like it should. It's the weekly chart is a leg F. I think the airlines are in for a little bit of a dip, especially with oil running like this. So I'd be a little careful. And the question is the transportation, have they topped? I think very short term, I'd be a little careful. Yep, there it is, F/B. I'll talk about it when we get back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, the Dow's up 24, S&P's down 4, and I really think that we're in for a pullback. Yeah, look, IWM is making a peak C. IWB is making a peak, a leg E, went even a little higher. IWB, if I can get, that was IWB, sorry. But IWC, and that's the microcaps, is only in leg C, making a peak C. So I think there's going to be one more spike to the upside, and then we've got to be somewhat careful. That's just the way I'm looking at it right now. And the Dow DIA made a new high today, and there's that little doji candle. So I think that we're getting very close to some kind of a pullback. All right, now let's just continue. So questions there. FXI, Sarah wants to know, Sarah, it's the same as the EEM. It's got this arch formation. It's a little bit deeper. It's even gapped down. Island reversal after a peak D. and not a very strong peak D either. It should have gone way above that former peak A on the left of the 8th of November at 37.90. So I think this is looking like an H pattern. I'd be a little careful on the FXI. And the question about the IYT, yeah, I think that it's ready for some. All of these charts are ready for at least a little bit of a consolidation. And one of the things that I'm really intrigued about is how does the market handle when you just know so many people did not get in on this last move to the upside. It was just so quick. It was so ferocious. And it had so many of the elements that we like to look at as the surprise factor. So that says to me that there is very good support to the downside, and that more of the surprises over the coming weeks could be to the upside. That's how I have to look at it. So the question was, what am I doing? Well, maybe I don't know if I have time. Yeah, I have just a moment here. Let me just go there. So this will be right here. So that was the Wood and the HGX. I showed the triple yield chart, discussed it in great deal. Today we stuck a little bit higher, and I said there's a chance that we get one of the most unusual instant restarts that we've seen in bond yields. That's unusual. This is every day I send off my Dow chart first, and then I discuss the 120-minute Dow chart, and then I usually send out either the E-mini futures or the overview and market today section. Here I go through all the wave counts in the key indices, why I think we're getting real close to some kind of a pullback. I'm calling it a pullback for now. I'm not sure that I want to call it anything more than that, but that's okay. A pullback can sometimes be deep, but I first think one or 2 days down, new highs in some of the sectors, not all, but some of the sectors, and then we've got to be very careful. So that's it. I had exercises that I gave I gave it to everybody actually. Yes, my IWM analysis. We still long the IWM from right down there. It's had a very nice run. I have to make a decision now. Do I want to hold these longs and see the profits dwindle, expecting that there'll still be higher highs to come in the weeklies, or do you want to take profits, go short, or you want to just take profits and wait for a new entry? That's going to be the decision I have to make for myself and my subscribers. I also gave exercises. I discussed how this works, to sell the buy signal to buy mode, how you count the waves, how you can use these channels, etc. Just a very comprehensive look at the markets. Here's something that I thought would be fascinating to look at. And then I give an overview for the week on the Dow, the daily, the weekly, the monthly, and everything I'm looking for in sum, what I'm looking at. And I mentioned that my Dow Quartet had done very, very nicely. That's GE, IBM, Triple M, and UTX. We actually long two of those, and they've done very well. So this is a very interesting period. So we're about to go to the end of the show. Check out my newsletter. It's called The Opening Call. Go to the front page of TFNN. And if you get it now, you probably could be signing up for at the same time for my webinar, which you'll get at a highly discounted price. So anyway, here we are. Stay tuned for your swim lessons, as well as we've got Steve Rhodes, we've got Dave White, Tom O'Brien, and I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.